guys. All right guys, welcome to Mr. Risk Trading channel every time guys. So today's video I want to explain my best of the best strategy that I have been using every time, that I call it the three rule method strategy guys. So the three rule method strategy, it has been applied here, and I will just show you and update you on details the trend that I have just taken using the three rule method strategy guys. So just go there in details and just break down. This is one of the trends actually that I have spotted at this point guys. So this is the trend that I took here yesterday every time. So I entered my entry point. In fact, this was my entry point. My TP level was at this swing, so this was the TP, and the stop loss below this specific structure guys. So I want to explain in details the three rule method strategy and how I apply it in trading, and I have been winning most of the times in trading guys. And this what I have just seen the equivalent, because the three rule method strategy, it has something to trade onto, and you cannot just come and trade randomly. If you comes in the market and you trade randomly without having a structure guys, you get some money, it's very okay, but remember, you are spoiling yourself, because you will not replicate these again and again. All right, so when it comes to the three rule method strategy, it is something that you can have consistency. You train today, tomorrow, and the day after there. That is what we call forex trading as a professional. But once you trade today and get some money today, but you cannot replicate this the whole of the year, right? You are not trading. Just the outcome of the trading, it comes with consistency and a lot of times, guys. So let's go on the three rule method strategy, and you can apply it over and over time. So the first thing, once you come in the chart like this guys, so let's say you have come to the chart right this. So right now the market, it is at this place, right? So the first thing, that is what we call internal structure and external structure. So you ask yourself, what is the external structure of this trend? So the external structure, it is the big runs. For example, in this move right here, this is an external structure where there is big moves, right? So you ask yourself, am I inside the external structure? So you zoom in like this, right? That is very nice. So the external structure, it comes at this, it starts at this point. You look at the swings, right? So this is one of the swing here. You draw, this is one of the swing, this is one of the swing, this is one of the swing, this is one of the swing. So if you break down this one, this is a clear downtrend. For example, we'll just name this one as this will be a lower high. In fact, this will be a lower low, this will be a lower high, will be a lower low, a lower high, and a lower low, and a lower high. For the people who does not know how to mark the market structure guys, so this is external market structure. When it comes to internal market structure, it is inside these runs, it is inside these runs guys. So this is internally the market structure. So you ask yourself, am I trading internal structure or external structure? So it comes a very deal ideological thing that you need to understand guys. If you want to look the market externally, remember, you are taking now the trends like a day full trader, right? So when you take it in internal structure, you are just looking at trade like intraday trader or a scalping. That is how it comes on internal structure. But for the sake of Mr. Risk, I always look at the external structure, because I'm looking in the bigger runs, in the bigger swings guys, every time guys. So this is Mr. Risk, this is how I break it. For example, in this trend that I took here, let me show you how I broke it guys. So the first rule, it is to identify the market structure, and after identifying the market structure, it was at these moves. So I identified this market structure like a downtrend, right? So specific, I identified this one as a downtrend, and the market was currently at this point. So when it was here, I marked this one as a lower high, right? So after marking this like my swing, I know the market it is gonna move down to fit that range. All right, so and you can see, right? So after there, the key factor, it is now the second factor. So the second factor, it is just any other confirmation influence that shows this is a downtrend. So for my sake, I use a trend line, guys. So I used something that I call the trend line. If you look, if you draw this trend line like this, it is supporting here, it is supporting here, it is supporting. So this trend line, it is to confirm this is a downtrend, right? So after identify this is a downtrend, guys, so I break down. In fact, after identifying that is a breakdown, a downtrend, so I break down like that. All right, so that is a very clean. So I was in a lower high, so having in a lower high, so I need to have confirmation, right? So after there, I zoom in my M that, remember this is only M that, right? All right, guys, so after there I look for confirmation. For example, in these terms, there is these continuous candles here and showing there is a strong bearish momentum, right? So after that confirmation, I enter some sales and target at these lows, and that is how I trend every day, every time, guys, using the three rule method strategy. So the first rule, it is to look at the market structure. The second one, it is any factor that is supporting. Yes, it can be a resistance, a support line, a trend line that is supporting, and confirmation that is a downtrend. After that, it is now a confirmation, and this comes in candlestick patterns that you see in the market every time. Remember to leave a like and subscribe to the channel every time, guys. If I'm speaking sense every time, remember to leave a like and subscribe to the channel every day. All right.